Hello, party people. There we go. This is weird that YouTube changed it where it doesn't say how many people are pending uh, before I go live. So I didn't know if it was working or not, but there's 28 of you. 28 is a nice number. 29 of you. I was too lazy to go to my desk. So I'm doing this like a hostage at my couch with the blank wall in the background. And I have my other laptop next to me here so I can look at the stock market while we talk. Hi, Fat Eddie. Oh, thank you for reminding me, Fat Eddie. For anyone that's asking to follow me on Twitter, the algorithm or the not the algorithm, this is a real quick, brief uh, explanation of why I probably can't let you follow me. So I've had a locked account for 10 years, and when you have a locked account, you get pending followers, and they just keep going without any way to search for them. So I have thousands of pending followers, and when somebody wants to follow me that's been pending for a long time, I have to go to the pending followers and manually scroll down fast and do control find for a screen name and just keep scrolling fast until the control find hits it. Yeah, this is how dumb and archaic this process is. Sometimes it takes me 5 or 10 minutes to find somebody and accept them. Well, starting 3 weeks ago, all my pending followers, except for like the most recent 30 or 40, they're gone, or I can't scroll down to see them. So unless you are a brand new requester, I can't find you to accept you. So if you are somebody that has been asking to have me follow you, this is what you need to try to do. You need to block me, unblock me, and then re-request me, and then at me saying you want me to accept you. And then also you can ask me on YouTube. I don't know if that's going to work or not, but that's the closest I've got. I'm looking at myself and I have you see this? I'm getting fucking old. That's a skin tag on my eye that I went into the doctor to get removed. And the doctor told me it requires a shot and then like a scalpel. The whole thing takes like 15 seconds. And I told him, no, thank you. So it's going to be there for the rest of my life or until I have the balls to get a little shot and a little scalpel. Probably soon enough. Those tags just disappear. You can rub it off. He told me it probably wouldn't come off, he said. It's been a month now and it's not coming off. So I don't know. Drinking wine. No. In fact, maybe we'll never get to stocks. I've actually cut my alcohol intake. Very proud of myself. I took a week off from drinking completely. And then I'm now trying to drink less, which just means like having my first drink around 5 o'clock or 6 o'clock at night, not when the stock market closes. So far, I've been successful in that. I'm still drinking like 3 or 4 drinks a night, but starting at 5 or 6 p.m. So, hey, good for me. What is my Twitter handle? I don't actually say that out loud on YouTube. It takes you a little bit of work and effort to find it. And, whatever. If you find it, you find it. If you don't, you don't. But it shouldn't be that hard to find it. I think it's similar to what this YouTube account is, but I don't even remember what the YouTube account is. Maybe not. Okay. Just wasted 5 minutes. Let's talk new ideas. So before we talk new ideas, let's talk stock market. I shorted the market a little bit today, put some hedges on, probably like, I don't know. It's like 65% short position against the 200% delta adjusted long book. I don't have any really strong views about the market going down, though I've been very bearish for a long time now. There's crazy bubbles happening in AI and crypto. It's very hard to be bullish at these levels. So yeah, tread lightly is all I'll say. But look, my stocks aren't really well, they're beta, but for the most part, they usually just go down when the market goes down. They don't go up when the market goes up. So I put on a hedge today. We'll see what happens. I've had a really good portfolio the last 6 weeks, like crazy good. As we all know, ABVX was a huge winner for me. And then now PRTA has basically gone from, I made a big 450 to 550 and it's 880. And it was a huge, gigantic position. So it's been a good, oh, and wow. As you all know, you saw my victory lap on wow. Wow worked. So it's been a really good 6 weeks. And I just want to be a little bit more defensive. Okay, let's talk ideas. Send me an email. I know to get the thing off your eye. Same thing. Oh, wow. All right. M Epstein at Gmail. Look at this. Value add. Let me write this down real quick. I'm just kind of trolling you all, and maybe I just won't give you the ideas and make you like, do you want to watch me sing? You play the piano or something? No. Hey, Michael. All right. Yeah, I'll email you. All right. So there's 3 ideas. I have 3 new ideas, really 4. One of them I think I talked about very briefly before, but the other 3 are all completely new, never talked about on Twitter or on here. 2 of them they're all special situations. All three of the 4 are the 3 big ones. 2 of them were just announced Monday, I think. They're all 2 of them are from this week, and one of them is imminently going to be resolved. So why don't we start with the one that I think is imminently going to be resolved, the most actionable of the 4. They're not small names. They're each about $1 billion market cap. So I'm not pitching some micro cap on here. They're a little thin, not really, but anyway, just calm your horses as I tell the names. So the first name, which I think is imminently going to be resolved by the end of September, is Forward Air, ticker FWRD. And this one I think is super, super interesting. My caveat up front is there's a lot of leverage on this. And each EBITDA multiple is something like $8 or $9 a share in equity on a $30 stock. So you are to be warned and to be cautious to how much sensitivity there is to an ultimate takeout price or in a break. In my mind, I'm going to get to the math in a second. A break, the stock goes to probably $20 a share, at least initially. And I think for a deal, the range is wide, anywhere from the low 30s, so kind of say 32.50 up to 40 is my range for Forward Air. Maybe even the low 40s, but really more like 32.50 to 40. Why do I like it? I like it because I think there is a very high probability of a transaction here. And I'm going to walk you through briefly the background. So Forward Air is a logistics company that is kind of like an asset light logistics company. And they did a acquisition in 2023 where they bought a complementary business called Omni, and it was a disaster. The stock was over $100 a share when they did this. They issued stock for it and some cash. There was no vote allowed for Forward Air shareholders, and you can go pull up the chart. The stock just went like straight down from 100 to basically to like 20 over the next 6 months. They overpaid for Forward Air. Sorry, they overpaid for Omni, and they put on a lot of leverage, and nothing went right. They then got a bunch of activists, and they also got a 12% shareholder in Clearlake, which is a large private equity firm. They bought in the public market an open market position of 12% of the company in 2024, and the management team was thrown out in 2024. So there's all new CEO, CFO again, there's multiple activists involved here. In January of this year, they announced strategic alternatives, but nothing really took off until May, when in May, one of the activists did a withhold campaign against 3 of the incumbent board of director members, and they won. And all 3, one of them didn't get 50% of the vote. The other 2 got close to it and resigned. So 3 board members resigned in May. The remaining board I'm going to get to in a little bit, but they're very shareholder friendly, the remainder board. And In June, Reuters reported that there was numerous private equity firms interested in the company. In July, Reuters reported that in the first round, 5 private equity firms have bid for the company, and one of them is Clearlake. And Clearlake amended their 13D in July, saying they have bid or will be bidding on the company. And then finally, early this week, or sorry, a week ago today, Axios Pro reported that second round bids have been delayed to early September from August. And the stock traded off to like the $27, $28 range. I should note that in the July Reuters article, they thought that a deal could be wrapped up by earnings. Earnings were 10 days ago and there was no deal. If you look at the conference call from the August, I think it was 11th or August 10th earnings, they mentioned the strategic process, and the CFO is kind of cocky in the way he responded about the process. He said something like, regarding the strategic process, and I know you're listening, we're not going to talk about it. It's progressing and we're not going to talk about it on this call. So where are we here? The business has been a huge disaster from when they originally did their Omni deal. I think they were supposed to do something like 600 million of EBITDA after synergies, and they're doing 300 million of EBITDA. So incredibly bad. A lot of that is cyclicality. And I think that EBITDA can be recaptured in the coming years with the right macro environment, and probably just some good old-fashioned blocking and tackling from a margin perspective. That 300 million of EBITDA seems very stable at this point. But again, there's tons of debt on this. It's like over 6 turns of debt. So there's huge sensitivity. If you look at the board, most of the board now is all made up of friendly shareholders. You have a 15% shareholder in the company that sold them Omni. It's called Ridge Capital. Okay. And then you also have a 2% shareholder in the other company that was the other fund that was involved in selling them Omni. Omni was a private company. Okay. The other shareholders the other board of directors all came in 2024 with the Omni deal or were part of a share refresh in 2024. Okay. The 3 bad directors have all resigned or been fired in May. Also in July, there's a new chairman, executive chairman, and he has a new comp package, and he gets 25,000 shares granted to him based on certain events happening in the strategic process. Obviously, I assume that's the sale of the company. I think your big risk here is simply just one thing, is if the bids aren't high enough for the 15% holder to be happy enough to sell their stake. Okay, remember this stock was $100 when they signed the deal with Omni and they were getting stock. And by the time the deal closed, it was 60 or something. And then now it's 30. Okay, so you have to ask yourself, is Ridge Capital a seller? And it's my belief that they never would have made it this far if they weren't a seller. Okay, you wouldn't have had first round bids were due in early July. That we're sitting here in the 3rd week of August. If the first round bids were very far apart from where Ridge would be interested in selling, this process would have already died. Okay, so I do believe that those first round bids were in the ballpark where Ridge would be happy to sell. Further, Ridge could roll their equity in the take private with whoever ends up buying them. Okay. The really interesting part here is having Clearlake involved. Clearlake owns 12% of the company already. They bought in the open market and they paid, I believe, the upper 20s for it on average. So a lot has happened ever since they put the position on in 2024. But they're already semi-pregnant and they're a $90 billion firm. And I think that they are willing to be the honest broker in this auction to make sure the company goes for a fair price. Otherwise, they'll buy it, right? They'll take it private. This fits almost everything private equity likes, okay? The business can have a lot of debt on it, a lot of leverage. It's a good business, despite the fact that the EBITDA went from 600 million to 300 million. If anything, it's a better, higher multiple business now at quote unquote trough EBITDA than it would be at peak EBITDA plus synergies at the $600 million level. Okay. So a private equity firm should be able to pay a premium EBITDA multiple for today, given the fact they could see a clear path to both delevering and also EBITDA margin improvement, and then of course revenue growth if this really is a cyclical issue, which I think it is. So you don't need Herculean EBITDA multiples to get to mid 30s here. It's like 10 and a half, 11 times EBITDA, current EBITDA to get to those numbers. So in a break, the stock goes to low 20s. But to me, I do think, I know this is like a broken record. I think a break here is because the Bridge Capital did not want to sell the company for the low to mid 30s, not because all 5 private equity firms changed their mind between round 1 and round 2. Okay, due diligence was over at this point, right? So it's not a due diligence issue. And I don't think the business is having any material changes from July to today. And with what's happening in the stock market today and interest rates, this is all good for levered companies, right? It's going to get cheaper to borrow. So all these things are tailwinds to a deal happening here. So the way I look at it is, I'm probably somewhere between 80 and 90% of a deal. The price is probably 33 to 38 in a deal, and low 20s in a break. And my position is pretty complex. I own common. I own a lot of call spreads. I have 1x2 call spreads on. One interesting trade, which you can still do today, is you could buy common. You could sell Jan 26, 35 calls against it, and you could do it 2-to-1. So you bring in like $2 on the Jan 35 calls. You sell them 2 times against your common. You don't start having that be painful until $39 is what I believe. And then even then you still make money. You're going to start losing money on the first covered call is going to make you $7 today, 2 plus 5, 7. And then the second call will start losing you money at 37. So up until 44, you'll make money on the overall trade. The way I've been doing it though is I own October 25 calls, and I'm short 2 January 35 calls. So it's a calendar spread. That's basically, I'm betting a deal will definitely be done by October OPEX, which it will be, or it'll break. And then I own common as well against it. So I'm not net short anything here. All the 2x1s, the long October 25s, short the Jan 35s are completely covered with common. And I left that part out, by the way. So I'm long 25 by 35 1x2s. So the stock would have to be well over $40 for me to have made a mistake there, because I'm paying like $2.20 for the 25 by 35 1x2s. So any deal between 30 and 40, I'm making over double my money, maybe 4 5 times my money on the 1x2s. And if it is a blowout price above 40, I'm going to be fully covered with my common. And then I also have a ton of 25 by 30 call spreads that, I was paying 280, 270, 285 for them. The idea was that any deal, I want to bet on a deal, right? With the stock at 30, you're probably gonna have to pay more for them. I don't know if they're a good buy at this price, but honestly, even paying 3 or 310, where you're risking 3, you make 2, and I'm certain the deal will be above 30. To me, seems like a pretty good deal. I don't love the 25, 35 1x1s that much, because I can see a world where a deal is 32, 33, 34 here. This stock is up huge from the lows in May. And again, there's tons of leverage. So that works both ways. I do think it works in your advantage here, though. And I do think you could have a deal in the upper 30s. So anyway, that's FWRD. When I said I was doing this YouTube this morning, the stock was 28.50, and now it's 30. And it went up all because of Powell. So it happens. Obviously, 28.50 and 30 is a very big difference in price when you're dealing with a rate of return kind of risk arb up down scenario where my up is 33 to 37 and my down is 2022. That $1.50 is a big deal. To give you some context, when it was 30, when I started looking at it, I made it a pretty small position. It wasn't a big position until it went below 29 and then 28. And then I put a lot of spreads. Okay, I've said enough. The next idea, which I really like, which has, I think, recently also been shared by a good friend of mine on his paid service, is Yext, Yext. And this one is still actionable, and this is basically what I paid for it, around $8.90. So what's the deal with Yext? This one is super interesting, I think. Calm down, guys. Jesus Christ. You don't have to rip it. The stock's there for sale, I promise. Just take it easy. Holy cow. Yext, on Monday of this week, issued a press release that said that the CEO, who owns 2.5% of the company, would like to buy the rest of the company for $9 a share. And did not name his partners, but says he has well-financed funding sources. And yeah, he owns 2.5% of the company, not 25%, but 2.5%. And in the press release, he says that he's more than open to having other bidders come in, running a full strategic process, wants the best outcome for shareholders. Okay, yada, yada, yada. That in itself is whatever, okay? It's the next two things that make it, or the next three things that make it extraordinarily interesting, okay? First of all, in that press release, he says that they're going to meet or exceed Q2 guidance that is due. Earnings are due at the beginning of September, okay? So they're going to meet or beat guidance without the number. They are withdrawing all their 2026 guidance going forward. It's January 2026. So it's this year's guidance. Their fiscal year ends in the end of January. And they're canceling all conference calls going forward. There'll be no conference call in September when they put out numbers. Okay. So that's nuts. And then the final point is that the stock was $8.12 on Friday. And it was in the low eights, low to mid eights for a lot of the last 30 days. And he bid 9, a 12% premium over the day before price. And there's no net debt in this company. So there's no net cash. The market cap is basically the EV. We could call it like $1 billion. Just round numbers, maybe a little more than $1 billion. Okay. So it's a 12% premium on a stock that is near a 52-week high, where the last time they reported earnings in June, the stock went up 20+% on the print. They beat, they raised, stock's up 20%. Okay. And then on Monday, they told you the CEO wants to take them out at 9. They're going to run a full process. They are no longer doing conference calls, and they're going to meet or beat earnings again. So why is this so interesting? So usually when we have these insider squeeze outs or take privates, there's two things that are very important to the process. One, they own a lot of the stock. They own 20, 30, 40, 50, 60% of the company. Okay. There's actually three things that happen usually in almost all these cases. They own a lot of the stock. They bid a decent premium at first, usually, never 12%. I mean, usually it's a decent premium, and then they give a bump and they secure it. Okay. But it's usually a decent premium. And then the third thing that I think is the most interesting that's different than this is usually they do it when the company is in a moment of weakness. Okay. We can go back through the last many of these we've played. Some of them have worked, some of them have not. But they've been when the stock has been down and out. Okay. When CD&R bought CNR, the stock was kind of blown out. Okay. When Surgery Partners had their bid from Bain, the stock was at 52-week lows after bad prints. When Target Hospitality had their bid from whatever the piece of shit private equity firms was, they just renegotiated their Picos contract, and the stock was at 52-week lows. Okay. This is usually the way it goes. Wide Open West. Wow. Stock was at 52-week lows. TDR. Yeah. Fuck TDR. So for this to happen, three things are different here. This guy only owns 2.5% of the company. The stock is near a 52-week high, and the premium was only 12%. Why I like it so much is that what happens if the strategic committee, the special committee, rejects the bid, they get no other bids, and there's no bump here? What's your break price? They just announced they're beating in earnings. The stock was 812 before. Today the market's up 8,000%, right? Your margin of safety here is tremendous. Is it 50 cents down? Is it 75 cents down? Is it no down? Okay. What's your upside here? Okay. If you told me that the CEO and his partners bid $12 or $11, let's go with $11 on Monday versus the $8 unaffected. Okay. That's a $3 premium at 8. That's 37% premium. Okay. That's low. That's not a strong premium. If they bid 11, I would have told you the stock would be trading between 10.50 and 11.25, and it would be a buy, and they're going to bump it by $1 to 12. Intellectually, honestly, that's what I would have told you. Okay. Instead, the stock's $8.95, a nickel below the bid. Okay. They're going to beat earnings. Okay. They beat earnings last quarter as well. And the company appears at an inflection point. We haven't talked anything about the company does or any history here, but let me give you a brief background. The chairman of the company is now the CEO, and he's been at the company in the chairman role since I think 2012. And he's been on the board since 2009. Okay. 2009 joined the board, 2012 became chairman. And in 2022, they fired the CEO and they put him in. Okay. He is a rock star. He is independently wealthy. He sold his last 2 companies, I believe, and he's worth like $250 million. Okay. He doesn't take a salary, and all of his comp here is tied up in PSUs and RSUs. In 2022, he got a huge PSU package and only vests if the stock is $15 a share. Okay. Now, do I think it's going to go to $15 a share in a sale? I don't. But that's the only way it vests, and there's no accelerating if it doesn't get 15. He then in 2024 got another PSU package. That one is already half vested for like 650,000 shares, and he has another 650,000 pending. Okay. The company wasn't making any money 3 years ago, and now is generating over 100 million of EBITDA on what is like $1 billion EV, something like that, in that ballpark. Call it 10 times EV EBITDA with a big stock-based compensation expense. Call it like a 50 million a year stock-based compensation expense. So it's 10 times adjusted EV EBITDA with a very low growing top line, though it appears like that might be at an inflection point. Oh, by the way, this is an AI play of all things. They help with search for local businesses and big national chains to help integrate with search. And they think they have kind of the best widget for the next generation search, which is AI search, ChatGPT and all this shit. Okay. If you look at their net retention rates and their gross retention rates, they're going in the right direction. Okay. It's showing that the business has turned around and is turning around. Okay. And the numbers are a little bit hairy because they do acquisitions too, but the underlying organic business seems to be finally at an inflection point and is going to start growing. This is Yext, ticker YEXT. Even if you use stock-based compensation as a full expense, and it is, and you knock it, I'm not sure 20 times isn't cheap for what this business is, right? If you fully knock them for the stock-based comp, given the fact that it seems to be a high-quality business that's at an inflection point growing and should have a lot of tailwind ahead of it in the coming years, given its end markets, okay? How does this play out? So they're canceling all their conference calls. Oh, I forgot the best part. 2 years ago, they had an activist, and the activist got a board seat. So there is a 12 or 11% shareholder who's on the board. They manage like $6 or $7 billion, or $5 or $6 or $7 billion. And this is their second biggest public position they own. They have $100 million in this, and their next biggest public equity is $50 million. And they have a board seat. So you have a shareholder who totally has your back. That's probably on the special committee, is my guess. And they're there looking after us. Okay. So how does this play out? So, oh, and there's one other weird wrinkle here. In June of last year, there was a Reuters article saying that they hired bankers for a process. And the next month, they did a pretty decent sized deal, like a $200 million M&A deal. And nothing ever happened with the process. The stock was much lower. The stock was like 6 and went to like 7 on the Reuters article. Now the stock's 9. And the business is much better now too. Margins have improved dramatically. It's in a much better place today than it was a year ago. There's a lot of questions to ask yourself here. Why did the CEO go public with this? Why wasn't this just a private process and the CEO and his partners put in a bid? Remember, the CEO only owns 2.5%. So the CEO did not have to file a 13D. They did not have to be public about it. If they did a private process, they couldn't cancel their conference calls. They couldn't withdraw guidance, right? I think those things are such interesting facts here, right? Why are they going dark? Why now? Why 2 weeks before earnings? Why such a shitty bid, right? The cynic might say, oh, he doesn't really want to own this. It's just a $9 stalking horse bid to get the company in play. But they could have just done that privately, right? And he's wealthy. So, I don't believe this is kind of a fake bid. And if it was a fake bid, why not bid 10 or 11? If you're not going to buy it, why not go all out? If your point is just to get goose the stock. And if you don't think there's a good chance of this resolving in a sale, why go dark, right? Usually you never go dark. Surgery Partners did conference calls. Wide Open West did conference calls. Even actually Soho, I think, canceled the conference. I think they did conference calls. I actually can't remember. They might have canceled their conference calls. And there was a deal there that just happened with Soho. So the way I look at it is your upside is honestly is $11, $12 a share, even 13 if you get a strategic involved, shit, even 14. If it's purely a private equity, let's say private equity comes here and nobody is interested in this except for the CEO and his partners. I don't think they could buy this for less than 10.50 off of the 8 unaffected. So it's 9 now. So, that would be 17% up in the next 4 months, this won't be a year process or anything like that. They'll have initial bids due in 8-10 weeks, is my guess. They've already hired bankers. In the press release, they already say who the special committee's bankers are. So this didn't just come out of nowhere. So the process should be up and running, rather quickly. And if the numbers are getting as good as they seem to be getting, the CEO is incentivized to do this quickly, to only have one print, the print in 2 weeks, and not let another earnings print happen in Q3, which would come I think in in December, early December. So yeah, I look at it as what, 50 cents down and $1.50 to $3 up. You got to be kidding me. So big position. This is like a 25% position for me. And my average price is like $8.85. But I was buying it here on the first day. I just kept buying it over this whole week. I don't like any options here. I just like common. Love to see some feedbacks. If anybody has any flaws, any questions, please hit me up. I'll look at the chat when I'm all done. So those are my two favorite new ideas. The other two are much smaller, and I'm still figuring them out. The third special situation, guess what, Michael? You nailed it. It's PLYM. And PLYM is a REIT that got a bid from 6th Street, I think it's 6th Street, on Monday, and they bid $24.10 in cash for it. The stock was trading at $15. It was a huge premium, 15 to 24.10. It's very confusing. It says they own 9.9% of the company, 5th Street, but they actually own no shares in the company. Here's what happened with this one. So last year, 5th Street partnered with PLYM for a joint venture. And in the joint venture, PLYM put in some assets and 5th Street put in some money, and they became partners. And as a result, PLYM owns like a stake in they do own they own a stake in PLYM that can be settled by the company in cash or shares at their option. So they do have an equity stake in PLYM, but it's not necessarily stock. It could be cash. And then they also have warrants that don't start until 25.10, I believe, and then go 25.10, 26.10, 27.10, something like that, in that range. And each tranche is for like millions of warrants, and they're out of the money. Okay. So what happened here? So on Monday, they file a 13D, and they say that they want to buy the whole company for 24.10. They're open to a go shop. They'll pay for all expenses to do their due diligence. They already have financing lined up. And they, yada, yada, yada. Two things that are super interesting here. One, the letter's dated Tuesday of last week. By the way, it has the wrong year on it. It says Tuesday, August 13th, 2024. They meant August 13th, 2025. So Wednesday, Thursday, and Friday go by, and they issued the D on Monday. And they say in the letter they're going to issue the D. They have to do it. They have to issue the letter, they say. The company issues a press release saying a special committee will, I think they say a special committee. Maybe they don't say a special committee. Let me see. Actually, I'm curious what it says. Let's see what it says. No, the whole board. There's no special committee because I guess 5th Street isn't on the board and isn't an insider. So 6th Street, excuse me, not 5th Street. 5th Street was already taken, so they called themselves 6th Street. Here's where this is weird, okay? You would think that Plymouth could have just done a friendly deal with 6th Street at a huge premium, and there was no reason to go this route. You have to think that 6th Street did it this way because maybe they're getting some pushback from management. Why I like it is the stock's trading $21, okay, versus the 24.10 bid. There are a ton of 9.9% holders. like 4 of them. And the premium is so big and such a fair value to what the fair value of the company is that I think it will be extraordinarily hard for the board to turn this down, even though REITs are genuinely bad actors and they want to keep their jobs and they don't want to sell. Okay. This REIT doesn't have a management contract or anything like that. And the CEO will get like a $9 or $10 million change of control if it's sold. There are all sorts of anti-takeover provisions in REITs. And I can't get into the details of them because I don't understand them. But there's no staggered board here. So you could vote out this board next year. I just don't know what that means for a process. If at 21.10, I assume they'll have to bump it a little bit, not a lot, maybe like $1 or 75 cents. You're looking at, call it 25, let's say, plus you get a dividend every quarter. Next dividend comes in a month. You're looking at 4 up, 6 down. And I think that there is at least a 75% chance a deal happens. Not to mention you now have a full process that's probably going to happen with other bidders. So I like this one. It's much smaller. It's a 7% position. I put it on yesterday. I can see why it's hairy, given that management and the board are not aligned with you. But 6th Street must know this management team well. Okay. They did this big deal with them last year. They don't own common shares. They own warrants. In fact, as I talk out loud with you right now, it would have been in 6th Street's interest to just ride this stock and hope the warrants make them money in the future. If they buy it all at 25, all the option value in their warrants go to 0, right? Because they own the whole company, so it doesn't matter. But if it remains a public company, those warrants all have substantial value in the future, potentially. So they must really like the company to want to go this route, which is not hostile, but semi, agitating by doing it public. And I don't think that this kind of firm, 6th Street, is not a hostile entity. So I would like to believe that they're friendly with management and that this is more of a hug than it is a fight. But I know why it's trading $21. And I would love feedback on this one too. If you go to like Seeking Alpha and you look at the Q&A or some of the comments in Seeking Alpha, overwhelmingly the problem here is that people don't think that they are aligned with us. People think that they're bad actors and they're just going to say no. I tend to disagree here, but this is new. This just happened, right? So there's no rush with this one either, though you get paid to wait because it pays a dividend. So I can think of worse ideas. I would like an excuse to make it big, but I'll probably wait a few months, at least 60 days, and see where it's trading and maybe take it up to 15 or 12%. For me, that's not a big position. That's not a pull my dick out and stroke it comment. It's just the truth. Just a reminder for everybody that's new here, I make things huge, either through options or through equity. And generally speaking, the reason why I do that is I look at everything after tax. So I'm in California, and a lot of these things, most of these special situations will be short-term capital gains. And with the Obamacare tax and with high brackets in California, you're getting to like a 55% blended tax rate. So as long as I have taxes or unrealized or realized gains, if I have a 25% position and I lose 30% in it, right? And I lose whatever that is, 8% of my portfolio, I'm really only losing like 3.75% of my portfolio. And that's a 25% position going down 33%. Usually when I'm buying these things like PRTA, which I'll talk about that in a minute and my other names, I don't put on 25% positions usually that I think can go down 33%. Though this year I've had some huge losers. So I lost 2,000 basis points on my portfolio on SWTX, almost all on call spreads. But even then, the 2,000 basis points ends up being like 9% of my portfolio, which is too much to lose. And that one was just a tremendous loss. And my real disappointment in myself in hindsight there was that I believe there'd be a deal, and there was a deal. Of course, I was wrong. It wasn't Merck. So I got many things wrong there. But I was always skeptical at these big blowout prices that company would sell at. And I thought I was being conservative by doing these 50 by 60 call spreads. And it turned out not only did I get the timing wrong, but the company sold for $47 a share. So I should have stuck to my gut that this wasn't a hot biotech. You could have looked to see what the stock did when they got approvals and when they had positive phase 3 readouts, and the stocks did not go up, right? And the drugs in general were kind of in niche, weird places that did have competition looming. Did I think it would sell for 2 times peak sales and like 3 or 4 times 2026 sales? No, I did not. But hey, I don't want to talk WTX. That one fucking sucked. So that's how I size things. Let's talk. We have some more time. This has been fun. I'll get to questions in a minute. So put all your questions in the YouTube, and I'm going to scroll back up from the top. Let's talk about the other ideas I have in my book. Oh, there's a fourth idea. This one is smaller. Okay. It's illiquid, and do not rip it. Okay. This is much more speculative and not timely in any way, shape, or form. Okay. I have a 4% position in SEPN. SEPN. It's a biotech. And again, there's nothing short-term about this at all. It's Septerna. I literally just had to Google what the name of the company was. I swear to God, I did not know what the name of the company is that I own. It's Septerna. And it used to be a busted negative EV biotech. So the history here is, I really like this one, but this one is definitely like a longer term hold. But this one to me is just fucking fascinating. So this was an IPO in the fall of 2024. Okay. And they had, call it 4 buckets of assets, clinical stage, or four buckets of assets, all preclinical. And only one of the 4 at that time was in phase 1 healthy volunteer testing. Okay. So 3 preclinical, 1 in phase 1 healthy testing. Okay. Oh, I should say up front, I know absolutely nothing about the science here. Nothing. Okay. I did fact check this with at least one of my very smart biotech friends, and they like the science and they think the company is very interesting. And in fact, Sport, rest in peace, my man, Sport, he tweeted about this in the past, and he also liked the science and thought the company was interesting. So that to me it helps to give you some foundation about why I find the stock interesting, beyond the fact what I'm about to tell you with the actual facts of the history of the company. So they go public, and the stock did really well. Pull up the chart. Like it was a hot IPO because I think the technology was very interesting to people. You fast forward to the first quarter of 2025, and the only asset they have that's in actual trials, the phase 1 asset, halts for safety. Completely halts for safety. They shelve it, and that's the end of it. Okay. The stock gets destroyed, goes to like $5, half cash. Okay. Half cash. I did not buy it, unfortunately, because it was very clear to me this company wasn't liquidating. Okay. They had 3 assets left. And in fact, they had 3 assets left, and they said that the next generation of their phase 1 asset that just blew up is being developed and could enter the clinic in 2026 in phase 1 testing. Okay. So they're going full steam ahead on the same program with a whole nother design, whole different drug that is not going to have the same problems that the safety had with the one that just blew up. Okay. I didn't buy it. I wish I bought it. Okay. Would have been the best, shelf stock
There was, basically. Instead, I bought Arvinas. And look what that did for me. I'll talk Arvinas in a little bit too, by the way. I don't own, I pretty much completely out of Arvinas. I just have October 750, 1250 call spreads, but I'll get to that later. So fast forward to May of this year, a few months after they blew up, and you get a press release that they partnered with Novo Nordisk. There's 3 assets left, I told you, right? None of them have entered the clinic yet. One of them was an asset on obesity and other targets that was in their press releases the 4th most important asset they had. The first one was the phase 1 trial that blew up. Then there was another drug, then a third drug, and then the 4th one was the weight loss drug. Okay, again, these are not even in trials yet. Novo Nordisk opens up its checkbook, pays them 190 or 195 million in cash upfront. Mind you, the market cap at the time was like 400 or 300 million. The stock was like 6 or 7. Okay, 200 million upfront. Plus, they are going to work on 4 different targets, including obesity. Novo Nordisk is going to fund every R&D part starting today, preclinical through phase 3, on all the trials and preclinical work. Septerna is eligible for $500 million in sales and milestones and sales were, Jesus Christ, regulatory and sales milestones on each of the 4 targets, and royalties. I think it's high single digit to high double digit royalties. And if that's not fucking enough, they can opt in to a 50-50 co-promote on one of the 4, anyone they want, after phase 1 trials, I think before phase 2 trials start. Okay. The stock went to like $9. Okay. Fast forward to today. Yesterday, they announced phase 1 trials have begun on their second asset. It's like mast cell disease. I have no fucking idea what any of this stuff is. Literally no idea. Okay. They're all big targets. All the, any company now that's IPOing and is hot isn't going for niche things. Either they're going for very rare diseases that are, not this company, but any companies that go public at this point. They're going for rare diseases where they can be billion-dollar drugs, or they're going for mass market stuff that can be billion-dollar drugs. You just assume they're all blockbuster potential. So they entered phase 1 yesterday in their second drug. Okay. Where are we today? Today, the market cap is like 550, 575. Okay. They have about that much in cash. I don't remember the exact number, quite frankly, but I think it's like $500 million in cash, maybe even $600 million. Let me pull it up. They have $580 million in cash today. Okay. Their burn is like 25 million a quarter, and they expect cash to last through 2029. They will never need a raise, this company. Okay. This is not a net though. That money will be burned on these trials. What do you get today at 0 EV? What if I were to tell you you can invest in my private company? Okay. I'm going to let you invest in it at a valuation of 0. We're just going to raise some cash, but there's going to be no pre-money valuation. 0. You put in $1 million, I put in $1 million. It's worth $2 million. Before you give me that $1 million, I'm going to tell you I just signed a fucking deal with Novo Nordisk. They paid me $195 million upfront. That's already part of the EV, so I'm not saying that is a value anymore. But they're willing to pay me $195 million upfront, and they're going to fund every single R&D piece of the puzzle going forward for my 4th most important asset. I have 3 other assets on top of that that are more valuable to me than this partnership. You get that for zero. Okay. To me, it's crazy. The lead drug that blew up in March, their next gen is going to go into phase 1 trials next year. And it should be superior, of course, they say this, to the one that failed. And again, it's a totally different mechanism of action. Everything's different about it. This was a hot IPO, right? That phase 1 trial was exciting to people. Okay. What happens a year from now when we find out that the Novo Nordisk collaboration brings 1 or 2 molecules into phase 1 testing, both being funded by Novo Nordisk? You then have 2 other phase 1 assets, wholly owned, all of them, by the way, able to get proof of concept or some element of proof of concept in phase 1 testing. Okay. How do I know this? This company is hilarious. They do not promote. There are no decks on their website. They don't do conference calls. But in June, they were at Jefferies, and I was able to get a transcript from their June fireside. And they run phase 1s, and they choose targets so that they can get proof of concept, proof of efficacy in their phase 1 trials with healthy volunteers. And the final reason why I love this idea, half the goddamn company is owned by the venture capitalists that IPO'd it. So it's closely held. You're completely aligned with the owners. This isn't something that is years later where there's no ownership on the board and you're not aligned. Half the company is owned by the insiders and the private equity guy and the venture capitalist, and they're not selling stock at $12 or $13. Okay, my guess is they wouldn't start doing secondaries until the 20s or 30s. And if you were going to take a step back and you were going to say, what is this worth? What is this worth? The way I look at it is I don't think Novo Nordisk spends $195 upfront and funds all the R&D for these programs and gives them all of those milestones and royalties if they didn't have an NPV of that partnership north of 500 million. I'm including the 195. So they pay the 195 and they have 305 million more of cost NPV to R&D, to milestones, to royalties, whatever. Okay. So let's call that worth 300 million alone. 300 million alone. I'm like a preacher repeating myself. How much is the other 3 assets? One just entered phase 1, one's entering phase 1 next year, and then the other one is unknown if or when that will ever enter the clinic. Okay. Didn't Novo Nordisk just validate this entire platform? Right? It's the first partnership they have. By them jumping in feet first at that size, to me, speaks volumes about the platform that exists here. I think conservatively, I mean, I would think the enterprise value should be 500 million conservatively, which doubles, the stock doubles from here. I think you can make an argument the enterprise value should be $1 billion. It's fully funded. You have a grade A partner that's also going to fully fund all those trials. And you're finally entering the clinic with at least 1, maybe 2 drugs in the near term. So your downside is that you get more safety issues, of course, as they run these new trials. Now, again, each of these compounds is totally different. So there should be no read-through in one safety issue versus another safety issue. And you have a bunch of shots on goal here. So again, if this new phase 1 trial has a safety issue, the stock will probably blow up again and go down 35%. But to me, it would just be a buying opportunity because you have the Novo partnership that's worth hundreds of millions of dollars. Obviously, at some point, you're going to give them a red flag penalty box if they keep having phase 1 issues with safety. But there's no reason to believe that's going to keep happening just because it happened the one time. Look, this is just a 4% position. I think I can make a really good argument that it should be a 10% position. I probably shouldn't have even pitched it to you people. So maybe that was stupid. So those are my 4 ideas. You guys got 4 fucking ideas in one YouTube, right? Come on here. All for now. This channel's free. Let's talk the rest of my portfolio, and then we'll get to questions. So PRTA, what a fucking monster this thing has been. It's still my biggest position with Yext. I have trimmed it a little bit as it's gone up, but today it's a 25% position. And the only reason why I'm trimming it is because it's going up so much and I own other stuff. So I wanted to make some room for it. The second reason why I've trimmed it, again, everything has to have context, guys. Position sizing. It's a 25% position. So if yours isn't a 25% position, then I'm already bigger than you now, even after I've trimmed some of it. That's just the nature of position sizing. So I wouldn't have a read through of whether I'm buying or selling without the context of what the position size was and what it is now. Anyway, they're going to announce 012 data next week. Okay. And I just wanted to have some flexibility to buy if the stock goes down on bad 012 data. I don't think that's possible. It makes no sense to me, but who knows what could happen with 012. Okay. Other than that, nothing has changed with PRTA. I still love it. I'm waiting for 012 data. Let's see what happens. The next biggest position is SGRY, Surgery Partners. Guys, I've mostly moved on here. I have a 20% position still. I know how hilarious that sounds. It's 20% delta adjusted. That's down from 50%. I've been trimming it. There's 2 negatives. CFO sold $1 million worth of stock a few weeks ago. And a board member who's very small, only owns like 30,000 shares, sold 25,000 shares over 30,000 shares. Obviously, those 2 data points mean there's no deal happening anytime soon. I didn't think a deal was happening imminently either, but don't want to see the CFO selling $1 million worth of stock. The real problem with Surgery Partners is this is not the kind of stock I own. I don't own buy and hold stocks that kind of compound, over time. I want to own event stocks. And this was a busted event idea, right? And the stock rebounded from 19 to 20 to 23.50. And it was huge. I made it huge at $20. So I that won't go to zero anytime soon because I like to keep some of it for 2026 capital gains. But you're not going to hear me talk too much about Surgery Partners going forward. It's like 8% common. I own a lot of December 2250 calls and call spreads, which I've sold a lot of. And it's a busted idea that I ended up not losing money on. I made a little bit of money on it with it failing. So I'll chalk it up to a win. My next biggest position is ABVX. Talked about that last time. I am not advocating for that. That was a 10-bagger, or sorry, a 7-bagger, 8-bagger. Actually, it was a 10-bagger for some of it. And I'm just holding that for long-term capital gains and 2026 taxes. So there's no pitch there at all. KROS is my next position. Obviously, we had a great letter from ADAR1, ADAR1, I think is actually maybe how you pronounce it, yesterday. I'm very sensitive to the price there. 1350 is very different than 1550 because I look at it as a stub position, right? $9 of cash is coming back. I need some water. Give me 1 second, guys. Hey, $9 in cash is coming back, whether it comes back from a dividend or it comes back from a tender. Tender will be more accretive, but if it's a dividend, you can make your own dividend. You can make your own buyback by putting the money back in the stock. So I haven't sold any, but I'm very short vol. So I'm short 15 calls. I'm short 15 puts. I'm short 1250 puts. I don't like any new trades there. I love my positioning. I expect a dividend or a tender in the next 4 weeks to be announced. And it's worked out great. It's been a great cash alternative, which is how I've kind of looked at it. I mean, again, I'm on margin, but from a risk perspective, someone on Twitter said to me, why do I own this piece of shit KROS? Because it wasn't going up a day when the market was going up a lot. It's just not the right way to look at it, right? It's because of the $9 in cash that's being returned. It's been a very low vol stock. It's basically been in the $13.25 to $15 range since June, and it should have a lot of defense in a down market, given the cash rich nature of the company. So that's how I look at KROS. PTGX, BBIO, those are long-term holds, as you all know. They're like 7% positions. Not going to update them today. SRPT, I cut that to 4%. I sold all my stock except for the stock that I bought at $11. I don't really want to talk about SRPT on this YouTube for many reasons. One, it's talked about by so many people, and I have such a history with the company. And honestly, I don't think I can give you a fresh take. I think they did the debt deal because they want to be defensive, and they want to make sure that they can survive, even if the worst case outcomes happen with gene therapy and with their PMO business. I think that's the approach they're taking. And I truly I couldn't begin to tell you what's going to happen with SRPT. I bought it at 11 because I thought it was blown out, and I'm going to keep my 4% position indefinitely. And it's going to give me a lot of indigestion, but at 4%, I can manage it. And you're not going to hear me talk about SRPT much on here. Again, it's so controversial and it's so talked about. I don't think I have really anything I could add. And that's it, guys. The rest of the positions are small. I have under 2% positions, 2.5% positions in CYTK, BSM, Cure, IMVT, Roivant, RGNX, CGON, MLYS, OR Venus. I don't really want to get into it. I think that idea is broken. I don't know what's going to happen if Pfizer takes over Vepdeg. The stock should go up a lot. If Pfizer hands back Vepdeg, unless the company has a really clear guidance into how they're going to monetize Vepdeg, I would expect the stock to go down. If I didn't already own those call spreads, I wouldn't own them today. So I am trying to exit them slowly, but it's hard to not lose money on the friction of the bid asks of the call spreads. So that's our Venus, whatever. I have TripAdvisor call spreads from 2027. And that's it, guys. That's my portfolio. We got through it. And I own gold. I have a 33% position in gold because I think the US dollar is worthless. And that's the best thing I'd come up with a hedge. I don't like crypto. I don't want to own crypto. I'm not bearish on Bitcoin. No, I'm pretty bearish on the whole crypto sector right now, given it's in a bubble. So yeah, I'm just going to stick with gold. All right. Let me start from the top here and answer some questions. If anybody has the request to follow, I'll try to look at this later and do it. I see some follow requests. If you give up drinking, I'll give up weed. I'm not going to give up drinking. I'm still drinking, nightly. I'm just trying to reset. It's been, and I'm pretty proud of myself. I made it a whole week without a single drink. So I haven't done that in, 20 years probably. Thank you. Just Crystal follow. Gary is into it now that he closed out his TH short. Oh man, I know, right? Fucking Gary. Interest rates may move in your favor to reduce the downside risk. What are you referring to? I mean, that's the case with all the levered companies. The interest rates moving, whether it's the REIT. Oh, you're talking about PLYM? Yes. Yes, agree. It's also the case with Surgery Partners. It's also the case with FWRD. They're all really good for highly levered companies. Chris, fun fact on PLYM. They're like most REITs, which is very management friendly, shareholder unfriendly, but they opt out of MCGL anti-takeover protections for now, at least. PRTA has been fantastic so far. Thanks, Chris. I've mostly moved on here. I have a 20% position. Yeah, I know. That's why. Well, that was why I think, Chris, I talked about my position sizing is not normal. Hold on, let me close this lines. I don't think I would. Well, I can tell you right now, I wouldn't have a 20% position in SGRY if I was putting it on today, right? I probably wouldn't even be in SGRY. Maybe I'd have a 5% position. Today, wow, that looks so much better. Sorry I didn't do that earlier, guys. Today, a lot of it is taxes and friction that keeps it on. And I have been trimming it. So it's just taking time. Now it makes sense why I was able to get some shares close to 20 right after the announcement. Oh, Michael, you're talking about PRT at PLYM? Yeah, exactly. Given the risk reward on Yext and the potential timing setup, why don't you think the options are interesting here? So, good question, Walter. So, I only like options in stocks when I see big upside or big downside, right? That's just buying the plain vanilla options, okay? In this situation, because the downside's muted, and I don't know it's going to go for a blowout price, I don't see where the options come into play. I did put on January 750-10 call spreads for $1.35. I got a decent number of those off. You can't buy them anymore. The two reasons why I buy options are as follows. One, I see vol very mispriced. So big upside, big downside versus where the option's trading. Or two, I want to place a fixed binary bet on a deal happening. But I'm not that worried about the price. I just want a deal to happen. So I did it with SWTX, where I thought 50-60 call spread was well below where the ultimate price would be in the deal, 50-65, whatever I did. I was wrong, right? Very wrong. With FWRD, I'm doing the same thing, right? All my call spreads are 25 by 30. So I'm like 100% sure if a deal happens there, it'll start with a 3 handle, right? I don't know if it'll be 32, 35, or 40, but I know it'll be above 30. So the idea there is I can make these call spreads huge, pay 280, make 220. If I think it's 90, 85, 90% to happen, it's 220 up, 280 down. I have a 90% chance of it happening. I can size it to whatever I want to lose, and it's just a fixed bet. I'm not worried about the timing with October or later, and it's a fixed bet, okay? Mind you, I got SWTX timing wrong too. XWTX could not have gone worse for me, right? I lost it all on the timing. I had March and April's. It got sold in May, and it got sold for 47 or 48 or whatever it was. Like, just an abomination of a trade, okay? So that's when I use options. I also use options when I've maxed out my common and I want to get bigger in the name, and I just can't get bigger, either for margin perspective or from a risk perspective. And with PRTA, I just bought as much common as I possibly could, right? I didn't like the call spreads there because I saw huge upside and I saw no downside, right? I didn't want to own the implied put. Here's a pro tip for you. When you put on a call spread, let's use Yext as an example, okay? When I put on that 750-10 call spread, what am I really doing, okay? I'm selling a 10 call to buy a 750 put. That's what you're doing there. That's what a 750-10 call spread is. Below 750, I can't lose money, and above 10, I can't make money, okay? Now with Yext, I hate that. I think the odds this goes to 750 are very, very low. And the odds this sells for above 10, very, very high. So why on earth would I want to pay for a 750 put by selling a 10 call? And that's exactly what I did here. I did it because it allowed me to get bigger in it after I already had a huge common position. Okay. And also, I don't have to pay interest on my position, right? I don't pay margin. I just pay margin on the call spread, but not on the overall stock price. This is how you should always look at options. So let's say with Yext, you just want leverage. And I go out to, let's say, January, and I buy just 750 calls or $8 calls, and I buy them in size. Guess what you're really doing? You're doing the same thing as buying the stock and buying an $8 put in size. You're paying for that $8 put protection. And I don't want to pay for the $8 put protection. That's expensive, and it's a waste of money to me. So I'd rather just own a lot of stock than own the stock and an $8 put. which is the same thing as owning a lot of $8 calls. So anytime you're looking to buy options, ask yourself, would you want to own the put at that same strike? And if the answer is no, you should probably rethink your strategy. That is your lesson for the day. All right, what else we got here? ARVN. I think Pfizer will do nothing to change VEPDEG arrangements or approval. You previously said you would not wait until 2026 like this, but when instead did they have to do it earlier? Man, I don't think it's going to take that long. I'll tell you why. Because Arvinas is supposed to build a sales force out. So I don't think it's going to take until 2026. I think that'll be resolved way sooner. I don't think this matters to Pfizer. This is like not even 0.1% of their business. So I think that'll get resolved. I don't know how it's going to get resolved, but I think it'll get resolved. Have no idea how Arvinas can attract a decent CEO until something is sorted out. This is my secondary position, as I am very bad at rebalance with situations change. I disagree with that. VEPDEG is actually pretty irrelevant to the Arvinas story these days. I'll tell you what the most important assets Arvinas has. 1, $900 million in cash. 2, the neuro drugs. 3, that other fucking thing that went into, that's being tried right now in cancer. 4, the KRAS drug. And then 5, VEPDEG. VEPDEG is a financial asset that's worth whatever. Glad I'm going to fucking block you. VEPDEG is a financial asset that's 50, 100, 150, $200 million in value, NPV kind of thing. I mean, they're not going to launch it. Pfizer's either going to take it off their hands and give them a small royalty or give them a fixed price up front. Very unlikely to do that. Or they're going to resell it, relicense it to a third party at not great economics. It has absolutely no bearing on whether a CEO will come to the company or not. Because all you have, the way to look at it is instead of $900 million in cash, maybe they got $1.1 billion in cash, $1.2 billion in cash in an NPV kind of manner. Okay. Arvinas is still cheap. It's cheap at 730. You know, do you have to blow out of it? You know, I chose to move on, right? I got tax losses. I think the story's mostly dead because you have preclinical and clinical assets that I think are pretty boring, and you're not going to get proof of concept out of them, probably not even in 2026. So you don't have an aligned board. You don't have an aligned management. You do have an activist. The activist only owns 6 or 7% of the company. I wouldn't be short Arvinas, but I just gave you a bunch of ideas that I think are pretty interesting. So for me, you know, this is the most important takeaway of this fucking YouTube. Your portfolio is a pie, and you can only fill it with so much fucking filling, right? I choose to use leverage to make my pie bigger. So I do have some flexibility to put on new names or make things bigger above what the pie size is of my equity. But there's 10,000 stocks out there, guys, and you can't own them all, right? And I'm strongly against having a portfolio of 100 names with like 1% positions in them. A lot of people love to have lots of little placeholder stocks. They say they won, I did it, I made it, whatever, and they make 1 basis point, 5 basis point, 8 basis points, whatever on these names. And to me, it's all distraction, okay? It's not how I invest, okay? I do have a bunch of 2% positions on these days. They're on for all different reasons. When the market was blown out, I put on a few small 1.5% biotech positions when I was in distress, and I couldn't buy any more than that. And I've kept them, and they've, you know, I'm going to hold on to them, and I'm hoping they're going to go to long-term capital gains, and they're interesting. Those 4 names are RGNX, CGON, MLYS, and and I sold the 4th one. So just 3 are left. And they haven't actually been that great. RGNX has been very volatile, though that's been done well. Yeah, I guess they actually have done pretty well. But they've been, you know, they were just really blown out. MLYS has done the least good of all 3 of them. Anyway, it's not the point. The point is I don't put on small positions, okay? You know, if I can't make something 5%, it really has no business being initiated in my book. 5% is the floor. SCPN is 6%. And that's because I don't know a fucking thing about the science behind what they do, right? And there's no near-term catalyst. So long way of short of saying, it's not that our Venus necessarily isn't a good investment or that it can't be $10 or $12 in the medium term. It's that I don't like it compared to the rest of the stuff that I love, and I'm okay with flexing and making things bigger, but I have to control for the overall risk exposure. There's a lot of risk on in the portfolio. I have, delta adjusted. Most of my stuff's equity at this point, but delta adjusted, I'm running 200% probably, something like that. But that was only like 125% before this week started, right? I made Yext huge. I made FWRD huge. And then I put on PLYM. And, that's 3 names right there that added significant exposure to my portfolio. All right. I can't believe I fucking talked this much. I can't fucking believe you guys are listening to me for an hour and 20 minutes. Holy shit. And with my fucking eye sty. Brokerman, if you get that thing off my eye, I'll be very happy. The dermatologist is really seems like a really honest broker. I think he would have told me how to get it off, but maybe he just wanted that insurance check. Side note, hilarious conversation about insurance. My wife went into a dermatologist recently, and she has like a small rash or something on her back, and then she also wanted to get her moles checked. And before she got to the appointment at the check-in desk, they told her she has to make 2 separate appointments for each so that she could have 2 different appointments billed to insurance and copaid to have a rash checked and to have her moles checked. Those each things that takes the rash takes 60 seconds and the mole check takes probably 3 minutes. My wife walked out of that dermatologist and never went back. The fucking chutzpah on these fucking people. We have terrible insurance, so we have to pay huge copays. So not only are they fucking insurance, they're fucking us too. Oh, and my wife would have to come back to a second appointment. We have 3 kids. She doesn't have time to go to 2 dermatologist appointments that when each thing takes 60 seconds. Fucking chutzpah on these fucking people. Gold will take up 100% of our pies when the miners start issuing convertible debt to buy more gold. I know, right, Jason? Jesus Christ. I would like to actually, if you guys know any good gold stocks, they're very rare. But if you know good gold stocks that aren't microcap, that are 500 million to 5 billion market caps, that are aligned, good, interesting gold miners, I rather own that than gold futures. So hit me up on my Twitter account if you have any gold ideas, or on the comments below. Oh, I never say this. Remember to like and subscribe. What the fuck are you guys doing over here? Like and subscribe, motherfuckers. I don't know why, but like and subscribe. Your tag is big. Now the lights are on, so maybe not a rub off after all. That's funny. I mean, don't you think I tried to rub it off first? You don't think that was the first thing I did? Of course I tried to rub it off. All right. This is the longest YouTube I think I've done in a long time. I love you all. Let's make some fucking money. Peace. Have a great weekend. Oh, and my buddy is in the Little League World Series. And my buddy that I grew up with is in the Little League World Series and playing in the United States Finals tomorrow at 3:30 p.m. Eastern. He is the manager of the Nevada team, Mountain Region, and he's got crazy curly hair down to his shoulders. Really good friend of mine. His son's on the team too. He bats second. His son's name is Brooks Fexer. Fucking watch the Little League World Series tomorrow and root for my buddy and his team. All right? I'm having so much fun watching. All right? Take care, guys. Peace.